Good afternoon. It is September the 15th, halfway through the month exactly, 2016, and time to recap today's trading. We came in this morning with our first sell 25 to 27, right in here, 24, 26, and we had a buy 15 to 17, and the market right before the day session opened actually did go below 15. We thought there was one short left in the market that came from right there. After the day session opened, we had a setup right here, good for a scratch. Then the structure really kind of kicked in with support in the 15 area, give or take a little bit. Did get stops below 15 over here. Right here, they stopped right at 15. So you have a retest failure. You have a monkey trade. Two monkey trades right here. Both of them end up scratching. Not much there. I like this trade when you come limit buys against the blue line. Third time, probably getting a little tired when that actually happens. We break out to new highs right here. You can see the trade against the blue line. Made a little bit of money, not a lot, but you had a pretty good trade location. So. Again, it is a way to get trade location. Another monkey trade right here. Little profit taking up in that area, then the monkey trades kick back in. So pretty good trading. If you're a fundamentalist, there's no reason for the market to be this high other than the fact that you think that, well, maybe the Fed's not going to cut interest rates next week. Based on today's data, they're not going to cut interest rates next week. Now, there's another factor out there. We've talked about it for about a week, is that the Trump factor. Wall Street is heavily invested in the status quo, the continuation of the Obama administration's policies. That's Hillary Clinton. This week, there's been a lot of selling in the stock market that bad news actually was bad news. And some of that could be the Trump effect kicking in, where maybe the market's starting to sense that Trump's going to win the election. I don't know if that's true or not, but that could be another factor that's going to play. So it'll develop through the fall when, if after the first debate comes, and if, let's say, Hillary loses the first debate pretty handily, and the market breaks the next day after that, then the market's telling you that Trump has won. That's the way we'll get our confirmation. Again, the F1 screen. Outside day, that usually means a trading range, so we're going to have resistance at 50, 47 to 50, and we're going to have support probably in the 30 to 35 area as the market opens. Very, very strong P. Got a new move out of the middle in J period, extending it up. So we talked about 42.50, this area right here, that London high, that single print. We got through that. We said the next stop, taking that out, is 47. It's still within reach. We'll see if that happens. If we get above that, the big number is 21.50. So right now, failure to take out 45, 47 would be sell 1. And sell 2 would be 49 to 54. On the buy side, you have this breakout from 38.50. So 35, 37, let them come back and test support right there would be buy 1. And buy 2 would be 30 to 32. But really trying to buy 31 even to 35 and sell the 45 to 50 area when it's all said and done. Okay, looking at the F2 screen and F1 screen on the 10-year, and that's where the volume is. That's the hedge. It's not the 30-year. Higher low, higher high, we can trade higher, but you can see right now that this 30, 28, 131 even is a pretty clean break in the market, and we're looking at a pretty pronounced B. Pretty square distribution. Rejected prices over 130.20. Last rotate up in M period was 17, we're currently at 13, so sell 15s to 19s. And 23s to 27s for sell 2. On the buy side, we've got a J period low of 12. We have an H period low at 9. We're currently last trade at 12.5, so let's make 5-9 buy 1 on the idea the E-mini will rally further this afternoon. Looks like it will, and 29 to 01 for buy 2. The news tomorrow, CPI plus 1/10. Core CPI plus 2/10. Consumer sentiment 90.8, that can come in lower than forecast. My guess is that CPI could come in lower than forecast too. And Baker Hughes rig count 642 for last week. That one could come in higher than forecast, as it has been due to higher prices. One of the interesting things in the oil patches is that cost to produce after drilling is one of the measurements that they use. So they've already drilled the well, it's sitting there, it's in inventory. Those are sunk costs, and it'll cost us to go in so much to go in and treat the well, and if we do that, we can get our costs down, in some cases $25 a barrel. That does manage to disregard some pretty heavy expenses drilling that well, but it's some of the reports that you see from the oil patch, or why is production going up, and the rest of it. Well, they've already drilled it, and now we're just really talking about how much it costs to treat the well and keep it going and open it up. So they need the cash flow. They're gonna do whatever they can do to get it done, and the banks need the cash flow too. Okay, we're at 04. We got the mode mean at 08 to 10. So first resistance is 8 to 12. Last rotate up an M period stopped at 16. Then we have an F period high at 20. So 15 to 19 sell 1. And then 27 to 31 sell 2. Outside, looking at this just structure-wise, we rejected prices below 64.24. We've rejected prices above 65.28. Kind of towards the low side. We're still dealing with a B, so if you had to make a trade at the market, it would still be from the short side. So we're going to give it some room to the short side. So support 24.28, 17 to 21 buy 1, 5 to 9 buy 2. Why 5 to 9? Got this high volume number, that's the attractor right there. If we bust 23, that low volume number, that points to ending up at 24 before the selling's over. Gold was quietly lower today. Didn't really respond. It did early with the news, and then nobody else was buying it, so gold came off with the rest of the contracts. And so we're still, in a trading range right here, and that's what it would show on one. But volume is definitely moving lower in the distributions. So we're still working, notching the market lower. The question is, how much lower? So this 1307 area kind of sticks out to my memory. We definitely have a B right here, so maybe 10 to 12 on the buy side. Then 4 to 6 for buy 2. Obviously stops below 1300 would be another consideration too. Last rotate up in M period stopped at 20, so 20, 22 sell 1. Then 24, 26 sell 2. So basically selling 20s to 25s. And buying the 5 to 10 area when you get right down to it. Just keep it simple, right? Now, we make these assessments, and sometimes we're not right. And if we're making these assessments, I will guarantee you other people out there will come to the same conclusions that we are. So when our assessments turn out to be incorrect, it adds more buying or selling power to the other side of the market. It's the way that it works. And we can't lose sight of that. Doesn't mean that you're right, and you can't be right on all of this, but as you work this into your toolkit, there are just some observations and some nuances that you have to start really thinking about. Lower high, lower low in crude, find a place to sell it. It's a P put in backwards. If we go to the W of the split, which would pick up everything out of this, a D split would be fine too. Definitely a B on the longer term. So 44, even 44 and a quarter still looks reasonable to me. 50 to 75, sell 2. On the buy side, 43 and a quarter, 43.50, buy 1. And then I'm going to put 42.50, 42.75. That's where I'm most interested in getting long. And I think next Monday my euro will be back. Blew that one, didn't I? You know, we still, just by looking through the structure and reading the market, been able to make reasonably good calls on the euro in spite of being handicapped. Less than perfect information. And you can do that too. I'm most afraid to do a split here. Higher low, higher high. Buy the euro, right? We like selling the 113, 113.25 area. And we'll like that. Oh, little gap right there. Going to lean against the gap to buy it, right? I don't think so. 90 to the buck. Sell 1. 25, sell 2. On the buy side, it's like 50 to 60, buy 1. And 25, buy 2. Tomorrow's news, CPI, probably won't affect this contract or the trading in that much. But there is pretty good selling 113, even to 113.25, and wouldn't hesitate to pull the trigger up there. Okay, that's it for this September the 15th, 2016. I will see you bright and early in the morning if there are no questions. You all have a great evening. Without questions, I'm out of here.